Hi everyone, and welcome to another executive interview here at Freetrade. My name is David Kimberley and I'm part of the editorial team. A quick reminder before we begin to sign up for Honey. So that's our daily market newsletter. You'll get an email into your inbox every day with market updates and other interesting bits of news. So today I have with me Jason Kennard, who is a co-founder at Rize ETF. And we're going to be talking a bit about the 4 ETFs that Rize has on offer, which are now available on the Freetrade app. So Jason, thanks very much for joining us.
It's no problem at all. Thank you for having me.
So to get started, can you talk a bit about what Rize is, what you guys do, what your goals are, all those sorts of things? Just a brief overview.
Yeah, I'll just dig in. So Rize is an issuer of exchange-traded funds, or ETFs as they are known. We actually specialize in thematic ETFs. We founded the company in 2019 and actually went live with our first 2 ETFs in February 2020, literally just before the COVID pandemic took everyone by surprise. So we've actually got team members that we haven't actually worked together in an office because everyone's been based from home. But I think that's just a sign of the times, and probably the same for most people. But the company was founded by 4 partners. That's Rahul Bhushan, Stuart Forbes, and Anthony Martin, and of course myself. We all used to work together at ETF Securities and Elgin. And Elgin purchased the business, the ETF business, back in 2019. So we'd all worked together for quite a long time, all got a kind of a complementary skill set. And we enjoyed working with thematic ETFs. And I'd actually been the team that built the first robotics ETF in Europe in 2014. So we felt this is our destiny to continue building out thematic funds, which we all enjoyed, researching, talking about, and actually, creating and listing them on the stock market. But Rize came into being while we're having a coffee with the 4 founders, and we're all throwing in ideas for the names of the new business. Some good, others were pretty bad. And then Stu got a text from a friend who suggested Rize with a Z. Now, I'm not sure whether he asked for help, cry for help, or whether it was just volunteered. But once he told us about the name, there was a bit of a silence. And then I think somebody said, yeah, I don't mind it. And then kind of everybody else followed suit. So we said, okay, if there's not a better name, then the name of our new business would be Rize ETF. And of course, there wasn't a better name. And the rest is history, as they say, and our company was formed.
Well, that's a good story. I won't ask what the bad names were.
There was quite a few of them, to be honest.
Okay, well, maybe that can be another interview. So you, as I said at the beginning, you have 4 thematic ETFs at the moment. Those are focusing on, I think there's one on the cannabis sector, one on digital learning, one on sort of future of food or sustainable food. And then another on the cybersecurity sector. So, I mean, I don't want you to go too much into detail on each one because I think that would take a while. But just in simple terms, I mean, why those 4? Why did you start out with those 4?
Okay, so we launched the first 2, which was cybersecurity and medical cannabis. They were kind of our first babies, as it were. And we'd actually had a history working with the cybersecurity ETF because we built one for ETF Securities, and we felt it could be improved. It was such a topical theme that almost you turn on the news and there's a news story of some description, some ransomware or data breach or privacy concerns. So it was in our DNA, if you like. So we wanted to bring out a new one. Perhaps it had some slight improvements. It had a slightly better revenue score. The TER or management fee was a little bit cheaper. And also we wanted to exclude controversial weapons in that. So it was a bit like a, cybersecurity 2.0. So that was our first one, and something we're quite proud of. And then medical cannabis, I think it was just something it was hard to ignore. There's such a build-up of momentum and news stories globally about cannabis, and the sort of the social stigma coming away, and people becoming more comfortable with it. These stocks were doing sort of roaring performance, and it was something that we really wanted to bring to the market. And we noticed there wasn't anything in Europe at the time, so it was a difficult product to bring. We had to go and look at a lot of the legalities of where it could be listed, but to be clear, we're not talking about recreational cannabis, we're talking about medical cannabis, which is legal. So that was really the rationale for those two. So those are our two kind of lead blockbuster products. And then the next two came about 6 months later, and that was educational technology and sustainable future of food, both first to market in Europe. And we felt that the edtech sector was a little bit ignored. So you speak to most people, they know a lot about fintech. They can tell you all the great, stories and companies, but educational technology was really growing quietly in the background, but, doing some great growth of these companies and development, that we thought that this was a very sustainable long-term theme that we wanted to be part of. So we launched EdTech. And then Sustainable Future of Food was a real labor of love. It took a long time to sort of put together in the taxonomy of the index, but there was a real gap, we felt as well, that people look at energy transition and what's happening in that market, but really the food market was kind of ignored. And we felt that somebody really needs to represent that potential investment opportunity in Europe. So that was our fourth stock that came to be in, or ETF, I should say.
Yeah, that's very interesting. And I mean, I'm sure that you've seen some decent inflows since you started, but which of those has been the most popular of the four, would you say?
So I would say, without doubt, it's the food product. I think it's just captured everybody's imaginations. I think there's been some, big name companies in the US like Beyond Meat and Impossible Foods, which isn't yet listed. But I think it's really, everybody wants to do a little bit more for the environment, and plant-based is gaining a lot of traction. And I think we want to go to a beach. We don't want to have plastic washing up. We don't want to see massive waste, land dumps and things. And I think this ETF really focuses on these kind of concerns and puts the balance of power back into the consumer, if you like. That if they make the choice to eat with a company that's better positioned in helping the planet, and they invest in it, that hopefully over time the companies that are not so good will transition what they're doing to the right way. So yeah, the food has been quite good in performance and really good asset growth. I think we're at $230 million since its inception in end of August last year. So we're very pleased with that one.
Wow. And you mentioned when you were talking about the ed tech sector that you felt it had been a bit ignored, which I think I would agree with. I mean, so just from putting the index together and working on the project and all that sort of stuff, are there any opportunities in that sector or any companies, pieces of technology that you think are particularly interesting that people should be conscious of as investors?
Well, I think that with the ed tech, I think it's a bit of a global phenomenon, and you've got companies in India that have been unheard of before, and China that are just come into the market. You had Coursera that IPO'd recently. So I think that people will get more used to these things. But one of a soundbite that I heard recently on EdTech is they're going to have 2 billion more learners between now and 2050, and that the education only has a 3% digital penetration. So there's so much more work to be done in sort of developing countries that need to go online. And I also think that the labour market, I think gone are the days where you went to university, you were educated, you went to the workplace, you retired. It's almost as if you need continual learning, because skills are changing, you need to evolve, and you need to upskill what you're doing. So I think that's got a really nice long-term potential and just good growth opportunity.
Yeah, well, I mean, I can relate, because during the past 12 months I had to do an entire course online. So, I guess I'm part of that growth story.
Yes.
But to change tack a little bit, I mean, we're talking about thematic ETFs, but haven't really spoken about what they are. And I think most people watching will probably understand superficially what it is that they're buying into. But I think what you guys do, it's slightly different than your run-of-the-mill, FTSE 100 or S&P 500 tracker. So, I mean, can you talk about the process of creating them? I mean, is it you who is putting them together? Are you tracking an index that someone else has put together? What does it look like, I suppose is the question, to build a thematic ETF?
Sure. I think the key difference for us is that we work with a thematic expert in their field. So for our cannabis product, we work with New Frontier Data. That's a US specialist in analysis and research in the cannabis field. In our cybersecurity, we work with Thematica Research, and they're a thematic research specialist based in Washington. So what we do is, we don't claim that we're the experts on all of these themes, but we look for people that are, and that, essentially that they can curate a very kind of purpose-built index, which really captures the theme. So I think just going back to what you mentioned, like a FTSE tracker, the FTSE 100 companies in the UK, they put it together in one share. We look at a thematic or a theme that has the potential over the long term to really grow. So cybersecurity, what does that mean? So it's companies that are defending other companies from cyber attacks. That might be hardware, software, or it may be a consultancy, or it may be companies that are specialists in penetrating environments to make sure they're safe from hacking and things like that. And it's really maturing. There's a lot of new companies and IPOs that are coming into it. So we will look at global environment as opposed to just saying that in the UK. And so we look at all countries which are really developing new and interesting businesses that have the opportunity to grow over time. So as I say, we work with the expert, they put our stock universe together, and then we add some filters to that. So it might be things like purity score. So in cybersecurity, should you have a company that's only got 5% exposure in revenue terms to cybersecurity and the rest is doing something else? Probably not. So we're looking for companies that are real pure plays in what they're doing. And then we add the standard filters such as liquidity and market cap and things like that. And then we have an exclusion list. So companies we feel that shouldn't make that. I think I mentioned controversial weapons and cybersecurity. That's kind of another field altogether. We don't feel that that should be in our index. And then it's given to an index provider and coded like a standard index. So it has index rule, index methodology. And then literally all the ETF will do is it will physically replicate all the underlying shares in that index, and we will purchase them physically, or the investment manager will purchase them physically. So I think from that sense, it's passively replicated, but perhaps there's an active element and discussion around the index level. And I think it's getting that right and getting that sort of theme as pure as you can. And once we're comfortable with that, then we're happy to build an ETF off of it.
Yeah, I mean, that was something I was going to touch on as well, which is, I mean, the Rize doesn't seem to be exactly like ARK or something in the US, which I think is probably much more active. But there is, I suppose, still an active element to it in the sense that you're having to come up with some criteria, as you mentioned, and then pick stocks to include. So, I mean, if someone is, let's say, anxious about stock picking of some description and feels that it's not worth their time or something, I mean, what would you, if someone comes to you and says, like, I don't feel comfortable investing in this because I don't like funds that I feel are actively managed, I mean, what would you say in response to that? Do you think that's a fair critique? Or?
Well, I think from my point of view, there's a time and a place for active and there's a time and a place for passive. I think, personally, if you ask me, what are we doing? We are passively investing because the index is codified. But what I think there is input at the index stage, and I think a lot of discussion and to get the taxonomy of that correct. I think our food index probably took about 10 months to put together because they wanted to get it right and they wanted it to correctly reflect the theme. So I think there's a lot of discussion at that stage, but once that's kind of agreed and locked in, it just becomes a regular index that's passively managed.
Okay, but yeah, that seems like a fair response. I mean, I suppose one perhaps a bit technical question, but again, let's say I have something like a FTSE 100 ETF, and like there's a rebalancing I think it's every quarter for FTSE 100, and then you might have firms dropping in and dropping out. So is there a kind of similar process for?
Yes, there is, and that's all detailed in the index rules and index methodology. So our indices are rebalanced twice a year, so it's a very transparent process. And anybody in theory could read that and replicate the index and follow the rules.
Great, that's good to hear. So I think that you guys have, as you mentioned, you're sort of the first in Europe to do what you're doing in many ways. And I think, but if again, the comparison is probably with the US, where there's more companies doing similar things to you, tends to have slightly different fee structure to again, the sort of run of the mill ETFs. So can you talk a bit about the fees that Rize investors have to pay relative to?
Yes, I'll probably just comment on the what I call a FTSE tracker, or a DAX in Germany, or a CAC in France, that those have become very kind of standardized, very easy for firms to replicate. The costs have been reduced, so there's been a lot of fee compression. They probably in the old days started off around 50 basis points. You could probably do some of those now at 5. So the market for that, has really come down. It's about scale business for those ETF issuers, and they're just a very efficient ETF tracker. The thematic, I think, is a little bit more involved. As I mentioned, we work with experts, so there is a cost to that involved. I think if you look at the thematic market, you're covering global companies, you're not covering just, say, the FTSE. There's more inherent costs there. And I think probably the range you'll see is anywhere from 40 basis points up to 75, 80 basis points in the thematic field. Most of ours, or 3 of ours, come in at 45 basis points, so at the lower end of the thematic space. And I do think that's fair value. Our cannabis product is management fee, or TR, 65 basis points. And again, there was just so much work and legal work that we had to complete, hence the slightly higher fee. But I think that to give you global exposure to many stocks in this sort of emerging theme is a very fair price indeed. But go back to the other point, the FTSE fee compression, it's all great for investors because they've got a lot of choice and they've got cheaper fees.
Yeah, well, I think just getting feedback from people using our platform, I think in general they would be happier, let's say, to pay for high growth and all that sort of stuff. I mean, I suppose that's true for investors in general. But moving on a bit, can you maybe talk a little bit about what Rize has planned for the future? Can we expect more ETFs being issued? Are you just going to focus on the ones you've got? What's next?
Yeah, that's a great question. So we are expanding. We have got a very robust pipeline of new ETFs and exciting themes, but they're all at different stages of development because some of them take a longer time to craft, and some of them we just can't get out in a short space of time. But I'm pleased to report we've got 2 new ETFs coming out at the end of this month. Obviously, it's no surprise that they're going to be thematic ETFs. I can't give you the exact details until they're sort of ready and approved. But what I can tell you is, they're global equities. They're ones in the fintech arena, and ones in the environment arena. So we're working hard to get those kind of delivered in time for the end of this month before everyone kind of goes away for summer. And then we've got a really robust pipeline behind it. And I think the other major thing is that we're in the process of expansion. So we've just hired a legal counsel. A lady joins us at the end of this month to help out sort of, product development, and she's a fund lawyer. So to build out our new fund range, we're hiring some product specialists and some business development people. So, we are really looking to expand the business, but we are looking for quality and not quantity. We don't just want to launch 20, 30 funds and, see which one works and then go and close them. We want to launch really interesting funds. And I think the difference that we do is, we're really mad about content and good content and education around the theme. So if you go to our website, we've got a research and insights page, and you can read kind of white papers, up to kind of an hour in reading, or you can have short blogs, 2 to 4 minutes, and it can give you a real update about what the theme is doing, what's it done in the quarter, or what subsectors are made up of, or what the future outlook looks like. And I think, we really want to continue with that and to really give something to people that they don't just buy a fund and kind of walk away, that we're going to be with them the whole step of the way, all of their journey, and really advise them on, what are the developing things in that theme. So onwards and upwards, I hope.
Yeah, that sounds good. And well, for anyone watching, I actually recommend your paper on ETF liquidity. I found it very helpful. So
that was actually done by one of my colleagues, and it's actually a question we do get asked, from time to time. So we felt that it was important to put something out there. But I'm sure I'd be happy to come and talk to you about that in more detail.
Maybe next time. Maybe that is an interesting topic. Because I think from the point of view of a regular investor, I think most people are familiar with the relationship between a share and a company and perhaps how it's traded and so on. But maybe to finish off, could you give a brief overview of how a company like Rize actually interacts with its ETF and how that sort of functions? Because there's a sort of relationship between the ETF price and the prices of the underlying, and I think people maybe don't exactly understand how that works?
Sure. I think, if you look at what Rize is doing, we are the product strategy. We think about, we research, we get the relevant partners, and then we develop and we build the product and we create it. And then what we do is we list that as a fund. So as in the name, exchange traded, it gets listed onto the stock market. In this case, on Freetrade, they're on the LSE, the London Stock Exchange. And generally you have a market maker that will stand behind the pricing, whether you want to buy or sell. There's somebody there all the time making a two-way pricing. So another function of Rize ETF is that we handle the ETF capital markets piece. So it's what's called the primary market. It's not so relevant to the retail market because, just like the UK's biggest companies, whether it's HSBC or Vodafone, they can go to the Freetrade app, they can see the price and they can buy or sell, and they will get filled, and there shouldn't be an issue there. But for larger institutions, they might like to deal directly. So there's a thing called an AP, which is an authorized participant, and it basically means they can accept orders from brokers or other market makers, and they can create and redeem directly with the fund. But as I say, for the retail market, they're what's called the secondary market. So I think the important thing is that the market maker always has a kind of a bid offer price up there all the time, and people can freely trade. And I think in the majority of cases that does happen. And then I think for Rize generally, we're the promoter and the marketeer of the fund. I think that probably covers that off, unless you've got any other specific question that I may have missed.
No, I think I'll have to save that one for next time. But I mean, maybe final question is, do you think you will stick purely with thematic ETFs, or do you see yourselves eventually moving into that kind of standard index tracker fund as well?
It's a very good question. I think, we want to specialize in thematics. That's where we feel we add value, and that, in sort of, getting good partners to come to market and being really good at content. I think that there's a lot of large providers that offer FTSE, so there wouldn't be much value in us adding something like that. But perhaps where our future could be is more along the sustainable path. If you like, sustainable thematics. So maybe that's an area. But in this business, never say never. In a couple of years' time, we might have a great opportunity to do something that adds to our repertoire, as it were. So,
great.
That's the question.
Great. Well, thanks very much for joining us today. It was a really interesting chat, and yeah, next time you'll have to come back when you launch those other ETFs.
The new two, yeah, that I can't mention. Yeah, we'll do. We're happy to do that.
Cool. Well, thanks very much, Jason. And just a reminder to everyone else, remember to sign up to Honey, get those market newsletters every day into your inbox, and yeah, join us again soon, hopefully for another chat. And thanks again, Jason.
Thanks to you as well. Thank you.
Bye-bye.
Bye-bye.